Question 1. Topic: Commercial General Liability Insurance. CGL, a manufacturing company, accidentally releases pollutants into a nearby river, causing environmental damage. The company has a commercial general liability (CGL) policy. Which of the following statements best describes how the CGL policy will respond? A. The CGL policy will cover the cleanup costs because pollution is a covered peril under coverage A. B. The CGL policy will deny the claim because pollution is generally excluded unless endorsed otherwise. C. The CGL policy will pay for third-party bodily injury claims but exclude property damage claims related to pollution. D. The CGL policy will provide coverage only if the pollution was caused by a sudden and accidental event. Answer D. Explanation. Under standard CGL policies, pollution exclusions are a significant limitation. However, many CGL policies provide coverage for sudden and accidental pollution events which are not deliberate and occur over a short time. Option A is incorrect because pollution is generally excluded unless specifically endorsed. Option B overlooks the exception for sudden and accidental events. Option C is partially correct but does not account for the exception for sudden and accidental pollution. This aligns with ISO CGL policy language and Ohio-specific interpretations. Question 2. Topic: Business Auto Insurance. An Ohio-based logistics company uses vehicles for delivering goods. The company's business auto policy includes Symbol 1, any auto for liability coverage, and Symbol 7, specifically described autos for physical damage. If an employee uses their personal vehicle for business purposes and causes an accident, or coverage will apply. Liability is covered under the policy due to Symbol 1, but physical damage is not covered for the employee's vehicle. B. Both liability and physical damage are covered under the policy. C. Neither liability nor physical damage is covered under the policy. D. Liability is not covered under the policy, but physical damage is covered for the employee's vehicle. Answer and explanation. Symbol 1 provides the broadest liability coverage and applies to any auto used in the business, including employee-owned vehicles. However, Symbol 7 restricts physical damage coverage to vehicles specifically listed in the policy. This means the employee's personal vehicle is not eligible for physical damage coverage under the company's policy. Option B is incorrect because physical damage is excluded. Option C is incorrect as liability is covered. Option D misrepresents the scope of coverage. Ohio insurance regulations emphasize understanding these distinctions. Question 3. Scenario-based question. Topic: Workers' compensation and employers' liability insurance. Mrs. Peterson, the owner of a small bakery in Ohio, hires an employee, Sarah, who sustains a repetitive stress injury, RSI, from decorating cakes over several months. Sarah files a claim for medical treatment and lost wages. Mrs. Peterson is unsure whether her workers' compensation policy will cover the injury. What should Mrs. Peterson expect regarding the claim? A. The claim will be denied because repetitive stress injuries are not considered workplace injuries. B. The claim will be accepted as workers' compensation in Ohio covers repetitive stress injuries resulting from job duties. C. The claim will be accepted only if Mrs. Peterson has an additional endorsement covering repetitive stress injuries. D. The claim will be denied unless Sarah can prove that the injury occurred suddenly and unexpectedly. Answer B. Explanation. Ohio workers' compensation laws cover injuries or illnesses that arise out of and in the course of employment, including repetitive stress injuries, provided they are directly linked to job duties. Option A is incorrect because repetitive stress injuries are explicitly included under many state workers' compensation statutes. Option C is misleading because no special endorsement is required for such injuries. Option D misrepresents the legal requirements for workplace injuries. Understanding Ohio-specific workers' compensation provisions is crucial for compliance and claims management. Question 4. Topic: Commercial property insurance. An Ohio business owner has a building with a replacement cost of $500,000 and has purchased a commercial property policy with a $300,000 limit and a 90% coinsurance requirement. If the building is damaged in a fire and the repair costs are $200,000, how much will the insurer pay after applying the coinsurance penalty? A. $180,000. B. $200,000. C. $150,000. D. $135,000. Answer A. Explanation. Required insurer equals $500,000 x 90% equals $450,000. Actual cover equals $300,000. Coinsurance penalty equals $300,000. $450,000 equals 0.6667. Insurer's payment equals $200,000 x 0.6660 SER equals $133,340. Since the coverage limit is $300,000, the insurer will pay $180,000, which is the maximum coverage limit of $300,000. Option is correct because it reflects the full amount of the coverage limit being used. Question 5, topic, crime insurance. A retail business in Ohio discovers that an employee has been embezzling funds over a period of 2 years. The company has employee theft coverage with a $50,000 limit and no prior acts coverage. The embezzlement totals $80,000. How much will the insurer pay? A. $50,000. B. $80,000. C. $0. D. $40,000. Answer A. Explanation. Employee theft coverage typically pays up to the policy limit for covered losses. Since the policy limit is $50,000, the insurer will pay this amount regardless of the total loss of $80,000. Prior acts coverage is irrelevant here because the loss occurred during the policy period. Option B exceeds the policy limit. Option C ignores valid coverage, and Option D miscalculates the coverage limit. Ohio insurance rules emphasize policy terms and coverage limits. Question 6. Scenario-based question. Topic. Farm insurance. Mr. Thompson owns a farm in Ohio that includes a farmhouse, barn, and livestock. A tornado destroys his barn and kills several livestock. His farm insurance policy includes scheduled coverage for structures and blanket coverage for personal property. Which of the following is true regarding the claim? A. The policy will cover both the barn and livestock under scheduled coverage. B. The policy will cover the barn under scheduled coverage and the livestock under blanket coverage. C. The policy will not cover the livestock as animals are excluded. D. The policy will cover only the barn as livestock requires a specific endorsement. Answer B. Explanation. Scheduled coverage applies to listed structures like the barn, while blanket coverage extends to unscheduled personal property, which typically includes livestock. Option A is incorrect because livestock is not covered under scheduled coverage unless specifically listed. Option C ignores the blanket coverage for livestock, and Option D is incorrect as no additional endorsement is needed if livestock is included in blanket coverage. Ohio-specific endorsements can expand coverage. Question 7, topic, commercial umbrella and excess liability insurance. A business in Ohio has a commercial umbrella policy with a $1 million limit designed to supplement its primary liability policies if the business faces a claim of $1,500,000, but the primary policy provides $500,000 coverage. How much will the umbrella policy pay? A. $500,000. B. $1 million. C. $1,500,000. D. $0. Answer A. Explanation. The umbrella policy steps in after the primary policy limit is exhausted. With $500,000 from the primary policy, the umbrella policy covers the remaining $500,000. Option B is incorrect because it suggests the entire umbrella limit is used. Option C exceeds the total claim, and Option D assumes no coverage is triggered. Understanding Ohio's insurance layering concepts is crucial for handling high-value claims. Question 8, topic. Inland Marine Insurance. A contractor in Ohio insures their tools and equipment under an installation floater policy. During a project, some tools are stolen from an unlocked truck parked at the job site. Which of the following best describes the policy's response? A. The policy will deny the claim because the truck was unlocked. B. The policy will pay the claim because tools in transit are covered. C. The policy will deny the claim because tools in transit require a separate endorsement. D. The policy will pay the claim only if the tools were listed under scheduled coverage. Answer B. Explanation. Installation floaters cover tools and equipment in transit or at the job site. Most policies do not require the vehicle to be locked, but carelessness might affect claim negotiations. Option A is incorrect because locked vehicles are not a standard policy requirement. Option C ignores the broad coverage of installation floaters, and Option D applies only to policies requiring scheduling, which is not typical. Ohio-specific inland marine policy interpretations reinforce these coverage principles. Question 9, topic, ethical practices and consumer protection. An Ohio insurance agent realizes they misquoted a commercial property policy premium to a client. The error would have resulted in a lower than accurate premium. What should the agent do according to ethical practices? A. Process the policy with the misquoted premium to honor the client's expectations. B. Notify the client immediately and explain the correct premium, offering the opportunity to revise the application. C. Cancel the policy and inform the client they need to reapply. D. Refer the issue to the Ohio Department of Insurance for guidance. Answer: B. Explanation. Ethical standards require agents to promptly disclose errors and provide accurate information. Option: A breach is ethical practices and could lead to regulatory penalties. Option C is unnecessarily harsh and could damage client relationships. Option D is unnecessary in this scenario. Ohio regulations prioritize transparency and fair treatment of clients. Question 10. Scenario-based question. Topic: Professional liability insurance. Dr. Martinez, a physician in Ohio, is sued by a patient for alleged negligence during surgery, resulting in complications. Dr. Martinez has a medical malpractice insurance policy with limits of $1 million per occurrence and $3 million aggregate. If the patient is awarded $1,200,000, how much will the insurer pay? $1,200,000. B. $1 million. C. $3 million. D. $0. Answer: B. Explanation. Medical malpractice policies typically cap payments per occurrence. Dr. Martinez's policy covers up to $1 million per incident, so the insurer pays this amount. The remaining $200,000 would need to be paid out of pocket or through additional insurance. Option A exceeds the per occurrence limit. Option C confuses aggregate and per occurrence limits, and Option D disregards the policy coverage. Ohio malpractice rules reinforce these limits to control liability exposure. Question 11. Topic: Homeowners insurance. An Ohio homeowners policy includes personal property replacement cost coverage. The theft results in the loss of a 5-year-old television valued at $500 depreciated value. The cost to replace the television with a new model is $1,200. How much will the insurer pay? $500. B. $1,200. C. $700. D. $1,000. Answer: B. Explanation. Replacement cost coverage pays the amount needed to replace the item with a new one without factoring in depreciation. Therefore, the insurer will pay $1,200, the cost to replace the television. Options: A and C incorrectly applied depreciation, and Option D arbitrarily reduces the replacement cost. Question 12. Topic: Business income insurance. A retail store in Ohio suffers a fire and is forced to close for repairs. Business income insurance covers $10,000 in monthly income losses if repairs take 3 months, but the store takes 4 months to fully recover customer traffic. How many months of income loss will the policy cover? A. 3 months. B. 4 months. C. Until the policy limit is reached. D. No coverage for business income losses. Answer A. Explanation. Business income insurance covers losses during the period of restoration, which ends when the property is repaired and operational. The additional recovery period is not covered unless the policy includes an extended business income endorsement. Option B includes recovery time incorrectly, and Options C and D misunderstand the coverage terms. Question 13. Topic: Workers' compensation. An Ohio worker is injured while performing duties outside their regular job responsibilities, but within the scope of their employment. Is the injury covered under workers' compensation? Yes, because the injury occurred during employment-related activities. B. No, because it was outside the worker's regular job responsibilities. C. Yes, but only if the worker is a salaried employee. D. No, because workers' compensation does not cover non-routine tasks. Answer: Explanation. Workers' compensation covers injuries arising out of and in the course of employment, even if the task is not part of regular duties. Options B and D incorrectly exclude coverage based on the nature of the task. Option C incorrectly applies coverage based on employment type. Question 14. Scenario-based question. Topic: Flood insurance. A homeowner in Ohio is required by their mortgage lender to purchase flood insurance. During a flood, water damages their finished basement, destroying furniture, electronics, and stored items. How will the National Flood Insurance Program (NFIP) respond? A. It will cover all damages to the basement and contents. B. It will cover structural damages but not contents in the basement. C. It will deny all claims for basement damages. D. It will cover contents only if they are specifically scheduled. Answer: B. Explanation. The NFIP typically covers structural elements in basements but excludes coverage for personal property like furniture and electronics stored there. Option A overstates coverage. Option C ignores structural coverage, and Option D applies an unrelated requirement. Question 15. Topic: Umbrella policies. A client in Ohio purchases a personal umbrella policy with a $2 million limit. If the underlying auto policy has a $250,000 liability limit and a car accident results in a $1,500,000 claim, how much will the umbrella policy pay? A. $1,250,000. B. $1,500,000. C. $1,750,000. D. $2 million. Answer A. Explanation. The umbrella policy pays the amount exceeding the underlying policy limit, $1,500,000. $250,000 equals $1,250,000. Option B includes the underlying policy's contribution. Option C miscalculates the amount, and option D exceeds the claim amount. Question 16. Topic: Commercial auto insurance. An Ohio delivery company uses rented vans for seasonal operations. The company's commercial auto policy includes hired auto coverage. If a rented van is involved in an accident, how will the policy respond? A. It will cover liability and physical damage. B. It will cover liability only. C. It will deny the claim because the vehicle is rented. D. It will cover physical damage only. Answer B. Explanation. Hired auto coverage under a commercial auto policy typically covers liability for rented vehicles, but not physical damage unless additional coverage is purchased. Option A overstates the coverage. Option C ignores hired auto provisions, and option D applies incorrectly. Question 17. Topic: Liability insurance. An Ohio contractor is sued for a construction defect discovered 3 years after project completion. The contractor's general liability policy includes completed operations coverage. Will the insurer defend the claim? A. Yes, if the defect occurred during the policy period. B. Yes, if the policy includes an extended reporting period. C. No, because the defect occurred after project completion. D. No, unless the defect was due to negligence. Answer A. Explanation. Completed operations coverage protects against claims arising after project completion provided the policy was active during the work. Option B adds an unnecessary requirement, and options C and D misunderstand completed operations coverage. Question 18. Topic: Ohio insurance regulations. How long must Ohio insurance agents retain records of policy transactions? A. 2 years. B. 3 years. C. 5 years. D. 7 years. Answer C. Explanation. Ohio law requires insurance agents to retain transaction records for 5 years. Options A, B, and D are incorrect based on Ohio-specific regulatory standards. Question 19. Scenario-based question. Topic: Ethics and compliance. An Ohio agent discovers a competitor is providing misleading policy comparisons to clients. How should the agent respond? A. Report the competitor to the Ohio Department of Insurance. B. Offer similar comparisons to counter the misinformation. C. Warn clients about the competitor's practices without proof. D. Ignore the issue and focus on their own clients. Answer A. Explanation. Reporting unethical practices to the regulatory authority is the correct course of action. Options B and C could lead to ethical or legal issues, and option D fails to address the problem. Question 20. Topic: Errors and omissions insurance. An Ohio insurance agent forgets to advise a client about required flood insurance, resulting in a denied claim after flood. How will the agent's errors and omissions EO policy respond? A. It will cover the claim if the agent's actions were unintentional. B. It will deny the claim because flood insurance was not purchased. C. It will cover the client's flood damages. D. It will deny the claim because the agent failed to disclose exclusions. Answer A. Explanation. EO policies cover claims arising from unintentional errors or omissions by the agent. Option B misunderstands EO coverage. Option C incorrectly applies the coverage to flood damages, and option D misstates policy exclusions. Question 21. Topic: Commercial property insurance. An Ohio manufacturer purchases a commercial property policy with a $100,000 building limit and an 80% coinsurance requirement. The building is valued at $150,000. If a fire causes $30,000 in damages, how much will the insurer pay? A. $30,000. B. $25,000. C. $20,000. D. $15,000. Answer B. Explanation. Coinsurance penalty applies when the insured does not meet the 80% requirement. Required insurance: $150,000 x 80% equals $120,000. Actual insurance: $100,000. Coinsurance FIC equals $100,000, $120,000 equals 0.833. Insurer's payment $30,000 x 0.833 equals $25,000. Question 22. Topic: Health insurance. An Ohio employer sponsors a group health plan with a 90-day waiting period for new employees. If an employee is hired on April 1, when will they be eligible for coverage? A. July 1. B. June 30. C. July 31. D. June 29. Answer A. Explanation. A 90-day waiting period starts from the hire date. Adding 90 days to April 1 results in July 1. Options B, C, and D are miscalculated. Question 23. Topic: Automobile insurance. An Ohio driver's auto policy includes uninsured motorist coverage if they are hit by an uninsured driver and suffer $50,000 in damages, but their limit is $25,000. How much will the policy pay? A. $50,000. B. $25,000. C. $0. D. $15,000. Answer B. Explanation. The policy pays up to the limit, which is $25,000. The remaining $25,000 must be recovered through other means. Question 24. Scenario-based question. Topic: Professional liability. An Ohio architect designs a commercial building, but a miscalculation in the plans results in costly repairs during construction. How will the architect's professional liability insurance respond? A. It will cover all repair costs. B. It will cover damages related to the error, less any deductible. C. It will deny the claim since the error occurred during design. D. It will only cover errors discovered after project completion. Answer B. Explanation. Professional liability insurance covers errors, omissions, and negligence related to professional services, including design errors. Option ignores deductibles, and options C and D incorrectly limit coverage. Question 25. Topic: Ohio insurance law. In Ohio, what is the minimum liability limit required for auto insurance? A. 10-20-10. B. 20-40-10. C. 25-50-25. D. 30-60-30. Answer C. Explanation. Ohio requires minimum liability limits of $25,000 per person, $50,000 per accident for bodily injury, and $25,000 for property damage. Question 26. Topic: Homeowners insurance. An Ohio homeowners policy includes coverage C with a $50,000 limit and a $1,000 deductible. If a burglary results in $10,000 in personal property losses, how much will the insurer pay? A. $10,000. B. $9,000. C. $8,000. D. $5,000. Answer B. Explanation. The insurer pays the covered loss minus the deductible, $10,000. 1,000 nils equals $1,000. Question 27. Topic: Flood insurance. An Ohio homeowner living in a high-risk flood zone is required to purchase flood insurance through the National Flood Insurance Program (NFIP). What is the maximum coverage available for their home structure? A. $100,000. B. $150,000. C. $250,000. D. $500,000. Answer C. Explanation. The NFIP provides a maximum of $250,000 for residential building coverage. Question 28. Topic: Claims adjusting. An Ohio claims adjuster is evaluating a total loss claim for a commercial building. The policy includes a replacement cost valuation. The replacement cost is $500,000, but the depreciated value is $400,000. How much will the adjuster recommend for settlement? A. $400,000. B. $450,000. C. $500,000. D. $600,000. Answer C. Explanation. Replacement cost valuation pays the full cost to replace the damaged property without deduction for depreciation up to the policy limit. Question 29. Topic: Ethics and compliance. An Ohio insurance agent offers a client a rebate to incentivize the purchase of a policy. How does Ohio law view this practice? A. It is allowed if disclosed to the insurer. B. It is prohibited under anti-rebating laws. C. It is allowed if the rebate does not exceed 5% of premiums. D. It is prohibited only for life insurance policies. Answer B. Explanation. Ohio law prohibits rebating as an unfair trade practice in insurance. Question 30, scenario-based question, topic, commercial general liability. An Ohio business hosts a public event and a guest is injured due to a fall on the premises. The guest incurs $20,000 in medical expenses. The business's CGL policy includes a $5,000 medical payments limit and $1 million in liability coverage. How much will the insurer pay under medical payments coverage? A. $20,000. B. $5,000. C. $15,000. D. $0. Answer B. Explanation. Medical payments coverage pays up to the limit $5,000 for injuries regardless of fault. The liability coverage is not applied unless a lawsuit is filed.